Today's topic is called Process Improvement, Benefits of Internal and Performance Audit. And really what we hope to spend some time on today is talking a little bit about not only internal audit process, but some other processes that can help organizations manage risk. By way of background, I head up Eide Bailey's internal audit services. I've been doing that for the last 2-3 years. I've got about 30 years of experience, including some time in a larger firm as well. My background, for those of you are interested, and maybe more so because some of my examples as I go through here will be a bit tainted because of my industry background. I primarily work in the healthcare area as well as health insurance, although I do have experience in other industry segments, government, and others, just given my internal audit work over the years. I am joined by Audrey Donovan, who's in our Denver office, and Audrey will give a little more background about herself when I kick it over to her during the second part of the presentation. As I mentioned, the learning objectives today really are to define an internal audit function, and what internal audit really is. Want to talk a little bit about their role and challenges and how internal audit can maybe provide more value to your organization. And even if you don't per se have an internal audit function, if there are some things that maybe you've been thinking about aren't working quite the way they are, how you can either utilize organizations to help you in that area, or maybe individuals within your area can focus on some of these particular touch points or pain points within the organization. In addition, talk a little bit about opportunities and where that value can be identified. And in particular, as I mentioned, Audrey's going to spend a little time on performance auditing and operational auditing, and we really think that's an area where there's a fair amount of opportunity to add value. First item I maybe want to cover is really just kind of centering the group. And I know we got a pretty broad group. It's not all internal auditors out there. There's people at different roles in organizations that maybe have some interconnectivity or touch points with internal audit, or maybe have thought about whether this sort of compliance function would be of assistance to them. And I always like starting out with what is internal audit and how is it defined by actually the Institute of Internal Auditors. And I think oftentimes what I end up seeing when this is presented is they're somewhat surprised at the definition. And I might paraphrase some of this definition here for you just to give you some context. First of all, internal audit is an independent and objective function. It's not only encompasses assurance, which I think a lot of people think of internal audit, it's testing controls and reconciliations, but it's really a consulting activity designed to add value and improve an organization's operations. The objectives really cover several areas. It does focus a bit on the approach around controls, but it's more than controls. It's risk management, controls, and governance processes as well. And controls are broader than just financial reporting controls. It would include other business operations as well. And and I'll talk a little bit about that as I get into this presentation a bit more. Oops, kind of went too far on that one. Sorry about that. Role of internal audit, as I somewhat touched upon, internal audit typically or should really be involved in the process of helping identify risk, as well as reviewing controls and then evaluating what residual risks exist. And there's some definitions here below for the group to take a read through. But I also like to point out that internal audit should be and can be a real integral part of the enterprise risk management process. And I like to distinguish that in that sometimes internal audit has a very heavy role in ERM, but they probably aren't truly the owners of ERM. They can help facilitate it. They can help assess and manage risks under ERM, but ERM, enterprise risk management, is really a management governance process. So I think that's important to keep in mind, that internal audit plays a role, and particularly in the risk identification, but ultimately when you're looking at an ERM process, um, that really becomes an enterprise-wide process. But what an internal audit can really assist in and add value is the facilitation of it, the fact that they have kind of a process orientation towards evaluating risks, and can really help facilitate and manage that process. As I mentioned, internal audit has traditionally been viewed as someone who's focusing solely on financial reporting, but internal audit has really evolved over the years to take on a much broader role in looking at risks, including operational, business, reputational, and other type of risks that are out there. And certainly in this environment, some of these risks are changing and moving, and quite frankly, moving pretty quickly. So I think that's another component of this where internal audit can certainly play a valuable role. Let's talk a little bit about internal audit and some of the particular ways that internal audit is getting pulled in to assisting organizations that evaluate risks and managing risks. A year ago, I did this slide, and I went through the slide, and I talked a lot about the current challenges, and a lot of it centered around current resource challenges that are out there. We were in a situation 1 year ago where unemployment was extremely low. Getting and obtaining and retaining resources and specific skill sets was a challenge. Most businesses were expanding, getting into new business segments. Acquisitions were being made, really changing how they do business, and continuing to expand to do things differently, such as doing things on a more digital level. We roll forward a year from now, and we've gone through and are in the midst of a pandemic. Many organizations have had to look really hard at their cost structure, and this has resulted in a variety of things: cost reductions, furloughs, reductions in force. And all those things have certainly created or could create gaps in control processes as people are trying to do more or the same with less resources. And a lot of this is happening, quite frankly, very quickly. And so I think as you look at the current challenges out there, the acceleration of change is quite dramatic. And so each organization should be stepping back and looking at what's happening, and making sure that those controls are being, or those processes are being managed, and the changes are being managed. In addition to that, we're all working more remotely. And my guess most of you have seen many things out there about the risk of the different type of platforms that are out there with respect to virtual meetings and those sort of things. The other thing we've seen, and I've seen personally, is the fact that maybe some processes are being shortcutted because people are working remotely. Transferring documents through unsecure means, or using personal emails to send information, or just skipping some sort of process or procedure that's in place. All those things raise the risk. In addition, more people are working remotely, so data security, network capacity, those sorts of things are also a greater risk at this point in time. I think that the area of supply chain is another area that I think moving forward is going to get more attention. I think many businesses have looked at supply chain as, certainly you need to have access to the supplies you need when you need them. But there is also a view of, to the extent you can save money by having a more narrow supply chain, that's more cost efficient. I think right now what many businesses may be facing, in healthcare in particular in certain areas, is access to the supplies you need, and how do you access those supplies if certain supply chains are cut off, or the supply chain is slowed down. So those type of risks are really something maybe hadn't been at the forefront 6 months, a year ago, and are certainly changing. I think the other thing that internal audit, or even other management functions are really need to think about too, is certain areas of personal policy, human resource policies. As I mentioned, many organizations are looking at furloughs and reduction in force, and we're also coupling that with a period where there's a fair amount of social unrest, and so it's very important, obviously, to make sure that those policies are fair and equitable, and any actions taken are fair and equitable, and so that's another area I think of increasing exposure and risk in an area where management and internal audit should at least think about how they're moving forward with this. And then finally, back to the remote work environment. I know our own organization looks very hard at when we do get back into the office, how do we do it, and how do we make sure we're comfortable, or the employees are comfortable going back into the office, and what can and can't be done with respect to that particular transition when and if it occurs. And many of you probably have already undertaken that. Value of internal audit, as some of this I've already talked about earlier. I think in this day and age, there continues to be increased scrutiny from outside groups. There continues to be a high level of regulatory requirements. There's even new avenues of funding through the CARES Act and various provider relief funding that creates additional record keeping and compliance monitoring. All those things are significant business activities and create risk in an organization, and also as organizations look to the future based upon what's currently happening in our economic environment, strategy is going to have to be continually evaluated. And internal audit can be a real partner in helping management assess recent decision making, changes made in the business and operations, and ensuring the processes are working as designed. Kind of going a little bit deeper down that same line, certain things that I think we've seen have where internal audit can certainly be of value. A couple of these I've talked about: risk assessment process and controls review. Really, new businesses or new processes, and that gets to not only acquisitions or acquiring new divisions or segments. I think a lot of organizations out there are now transitioning to a more digital way of delivering their goods and services, and how are those done, and what are the risks associated with those delivery channels. I'll speak to healthcare alone in that certainly in the last 3 months, not only has there been a decrease in some of the elective type procedures, which has caused a real business challenge for organizations, but there's the advent of or increasing acceleration of telehealth services. And similar to what I mentioned earlier, that creates some risks with respect to privacy. But there's other risks too, because there's emerging regulatory and compliance requirements about billing and coding for those sorts of services. And that puts a challenge on those functions in an organization. And I'm sure that in other industries, you're facing some of the same type of things. Those industry skill sets are important and oftentimes can reside in this function. Audrey's going to talk a little bit about operational audits and performance audits, and I think the only thing I'd like to mention there with respect to it is, as organizations are looking to be as efficient and cost effective as they can, performance and operational audits really can assist in that area, because they're really designed to better understand how a function, how a contract, how a particular service is operating against a defined set of criteria or contractual relationships or similar. And so those in particular can add a lot of value to an organization, and as they're working through these type of challenges we're all facing. Other areas of value, kind of taking off from what I previously mentioned, there's a couple things here maybe to point out. I mentioned earlier things such as new ventures, joint ventures, divisions, remote locations. I think oftentimes when we get involved in looking at some of these locations, the question is, are they fully integrated into the corporate structure, and are they following all the procedures? And so oftentimes we identify some gaps there. We still continue to see opportunities in the revenue and expense area, and we'll talk a little bit more about that when I get into data analytics. And then construction area is still an area where there tends to be a lot of value in identifying maybe some gaps in the construction billing process. So just some individual unique areas that we've seen some opportunities. Other emerging areas, and I'll touch on a couple of these a little bit later before I transition to Audrey. Data analytics and digital transformation. I think all organizations are looking at how to better do this, and I think whether you're in internal audit or in some sort of control function in an organization, this is an area you should really think about, and how to integrate that a little bit more into what you're doing. I think there's a lot of value in it if you can implement it effectively and in a way that achieves the objectives you want. And I'll talk a little bit about that later. Culture and culture audits have become in the last 2 years somewhat of a hotter topic. And most people think of culture around ethics, but there's a way to review culture around a variety of areas that can provide good feedback to management. Continuous auditing is certainly something people look to, because instead of making a start and stop point in time, if there's a particular area that's of concern, that's an ongoing process, it's a way to provide direct feedback on a continuous basis. And then, of course, other areas like industry-specific risks, data security and governance, and quality. Let's maybe just talk a minute or two about culture. Culture, as defined, is the study and examinations of an organization's cultural characteristics to determine whether they hinder or support its vision and mission. A lot of words there, but really it gets to the point of, have you developed a culture that fits what you're trying to achieve? And that could be a high ethical culture. It could be customer service culture. It could be a collaborative culture. It could be an innovative culture. It could cover any of those type of areas. And interestingly enough, the internal audit world has really moved forward in developing and designing ways to provide feedback as to whether organizations are achieving what they hope to achieve through the culture they build. We got another question, Amy, if you want to jump in.
Sure. And the polling question number 2 is another true or false. What characteristic of an organization is used to determine whether they hinder or support its vision and mission? Scott, what would the correct answer be?
Well, it's not really a true or false
Right.
item, but and it's really it's really culture is the answer, number 2. So
Okay. All right. Well,
culture and evaluating culture. Why is it a challenge? Well, it's a challenge because it's a very soft, esoteric area. Interestingly enough, though, to evaluate your processes and procedures and understand how management is driving a culture is something that's actually very measurable, and it's measured in a variety of ways. It's measured in some of the policies and procedures you have in place, potentially training. It can be measured by how management, department, division meetings are held, and what topics are discussed and what's stressed. You know, if it's a growth-oriented culture, there's probably discussion around growth. If it's a culture of really wanting to have strong collaboration, that's probably going to be talked at those meetings, and you're probably going to have trainings that are set up to help employees through that process. In addition, you're probably going to have internal surveys that ask questions about those things. So there's actually a lot of things, a lot of input that you can get through reviewing how management has developed policies and procedures to address the culture they they're trying to achieve. And oftentimes people think when you're auditing culture, it's ethics. You're auditing ethics, but you certainly can audit culture in a variety of those ways through some of the things I mentioned. And again, that's something to think about. You know, how are you evaluating culture, and is it being evaluated in your organization? Just a couple quick comments here. I think I hit many of these. Auditing culture is complex and ever changing because the norms and the environment changes daily, and so culture needs to be modified to fit the current needs and structure and environmental conditions that are out there. There's no standard model audit program or checklist, but you can certainly define a scope, and you can certainly assess data and information that's already out there to help better assess the cultural aspects of an organization. And in fact, culture assessment can also be embedded into other projects or audits that are done. Oops, went a little too quick there, sorry. Data analytics, let me see, yeah, data analytics. Couple comments on data analytics. Really, it's something I think anybody in a control structure should really be thinking about how to use these more effectively. Data analytics can be predictive, and they can also be interpretive as you move towards a more sophisticated data analytics process. Really what you're trying to do is identify outliers and use the data in order to identify those outliers. So the question is, question relative to data analytics is how do you go about doing it, and how do you take that first step forward? We got another polling question. We're really hitting you with polling questions here. So
We are. All right, this one actually is a true or false. An auditing culture is a complex and ever-changing concept. All right, looks like the voting has stopped, and we are at 98% true.
very good. That would be the answer. Yes. Just to continue on in my discussion of data analytics, the comment at the bottom is probably the first place to start. If you're not doing it at this point, I would keep it simple at first. I think it's important to make sure you identify what you're trying to accomplish or achieve. And it's important to, as it says here, to have access to data and having good data capabilities, a good data warehouse. Once you have that in place, frankly, you can design a variety of different things, whether you're part of internal audit, whether you're part of a finance or accounting function, to better assess whether there are any issues, concerns, or anomalies that are out there. And what we've used it for pretty effectively, really kind of taking that first step, is in some of the areas I mentioned here. In particular on the revenue side, if you look at healthcare organization in particular, there's a lot of different things you can develop around benchmarks internally around billing for certain processes and procedures. How often they're billed, what's the billing, what's the dollar of the bill, who are the bills going to? Does it make sense that they're going to certain organizations? Are they getting are the bills getting paid in a timely basis? On the expense side, similar to that, I think you really, if you get into some of the payroll side, you get some really unique things. You can actually do some data analytics to look for duplicate payments, fraud potentially. You can actually identify change in addresses that occur more than once over a certain period of time. You can identify if pay rate changes are made over a certain period of time. You can benchmark internally around things such as overtime, or things such as bonuses that are paid during the year. So there's a lot of different things you can do to try and find those anomalies that are out there. And then as you get more into predictive type of analytics, you can start predicting what you would expect to see from certain areas or departments or divisions in those particular areas. So a lot of opportunity in data analytics. That's kind of a whole separate presentation we'll do. And I would urge you to kind of look for those type of things, those type of presentations if you're looking for more information, because there's a lot of really neat stuff out there on it. The final item that I'm going to talk about today is just maybe 2 comments on data security and governance. I think it's just really important to make sure you're taking a look at what's happening now. Make sure you get good training, make sure there's testing going on. And probably as important as anything is data security is really an organizational wide responsibility. It's not just IT. So if you're working in your departments, in your divisions, amongst your group, I think it's really important for you to mention and stress to your teammates the importance of following the procedures in place, making sure you're paying attention to your security protocols, and being alert for those sort of things, because it's really everyone's responsibility. And then secondly, in your organization, it's really an important governance process. I always like to, in these presentations, let people know that, I go to board meetings and there's always a discussion on the financial statements. There's always a discussion about operational volume matters. There's probably a legal update. I always am kind of amazed that there isn't a regular discussion about information security and information security risks and what type of issues are out there. Maybe that's not every meeting, but more than once a year. And I think that's, more organizations are going to that, but I think it's important to, raise that as a risk in your organization's risk profile. With that, I'm going to pass it off to Audrey.
Hi, everyone. This is Audrey Donovan. Thank you, Scott, for the background and information that you provided. My goodness, that's a wealth of information. And I know it was really high level. There's a lot of information we can go to that would even be more detailed than that. So wanted to thank everyone as well. I know Scott said thanks to everyone, but I was just looking at our attendee list and we have a really big turnout. We even have individuals from Canada joining us today and members from all sorts of different industries, local government, looks like healthcare, manufacturing, some education industries. So thank you all for joining. I appreciate it. And I'm actually coming to you live from Denver, Colorado, where I'm sitting in my front office. The office at the front of my house, and I can see the rain clouds starting to form and come in for the afternoon as we're going to top, I think, 91 today. This section of our presentation or webinar is performance auditing and how can you use it to make your operations better. First, I just want to give a bit of background about myself, my career and how I became a performance auditor. I started my career as a controller for a mining company and quickly learned when the external auditors came in to assess the inventory in the warehouse that I wanted to be an auditor. Handed them over the list of inventory items and they left my office, went down to the warehouse, came back 30 minutes later, and they said, "Here you go, we're done." And I thought that was really phenomenal that they could be done in 30 minutes. And they said, "No, we're done today because your warehouse is unauditable. We could not find anything on your list to be able to inventory." And I was shocked. I had no idea what that meant. What were internal controls? What were warehouse controls and inventory controls? So from there, I switched my career to internal audit and joined PricewaterhouseCoopers and joined Ernst & Young shortly thereafter. So about 10 years with Big Four accounting and quickly learned internal controls and all about SOX 404 and compliance for all different industries, telecom, mining, banking, healthcare, which was really great. It was a great exposure and opportunity to learn a vast amount of information that Scott had just mentioned with regards to governance and culture and staying abreast on what's going on today with the pandemic and the landscape of the controls, risks, and changes. But for me, I've always wanted a family, and it's really difficult to do that when you are traveling 90% of the time, home every third weekend, and you're working 60 plus hours a week. So after 10 hours of enjoying the travel and the wealth of knowledge, I switched over to government and quickly learned that there's a lot of internal control opportunities that could be implemented in government, and there's a lot of takeaways with efficiency and effectiveness and economy from government that I could learn. And it was a really great training ground with regards to training the staff and the resources that I had when I migrated over to the city and county of Denver and became the audit department's deputy director under then Auditor Gallagher, which very proud to say he was a 38-year Colorado state senator, learned a lot about politics, and even helped run legislation at the state capitol to grant all 64 counties in Colorado access to their health and human service records so we could do an audit of the abused and neglected children within that program. So anyway, that's my long history of how I became a performance auditor, and I absolutely enjoy it. No two projects are the same. Each one is quite unique, and I will walk you through what the performance auditing process is, the difference between that and operational audit, and then performance and operation audit versus internal audit. And then we'll wrap up and conclude with an actual performance audit that was conducted. There we go. So performance audit versus operational audit. And many of you probably already know what performance audit and operational audit are. So I will stick to a high-level refresher and not get too technical with the concepts. But performance auditing is simply an audit aimed at evaluating the measures instituted by management or the lack of these measures to ensure that, one, resources have been acquired economically, and two, that they've been utilized efficiently and effectively. An operational audits, the Institute of Internal Auditors here, the IIA, defines operational audit as a systematic process of evaluating an organization's effectiveness, economy, efficiency of operations under management's control and reporting to appropriate persons the results of the evaluation along with recommendations for improvement. We should probably also add that operational audits are also independent evaluations and conducted by independent auditors of the organization. Oops. Let me scroll back there. There we go. Got a little ahead of myself. But you can quickly see from these two definitions that there is the overlap. You can see in the bold, the economy, efficiency, and effectiveness. Both the GAO and the IIA are basically saying the same thing, with that being the focus. And then also they're performed by independent auditors, and they're also an evaluation of managements. So when we say management's economy, efficiency, and effectiveness. So how do we determine whether management is operating economically, efficiently, and effectively? A typical performance audit or operational audit, we say performance audit more so in government, and operational audit more so in business, manufacturing, retail, but they're really used interchangeably, and in fact called other different things as well, but we'll stick with performance audit here. So a typical performance audit would address all three of these E's in an engagement. First would be to determine whether resources are acquired at the right quality, in the right quantity, and at the right time and place for the lowest possible cost or economy. Secondly, we would determine the optimal relationship between output of services or other results and the resources used to produce them, or efficiency. I guess said another way would be how much effort or input is needed to produce one output or service. So the focus here is on output. And then lastly, to determine whether policy objectives, operational goals, and other intended effects have been achieved, or effectiveness. Other way of saying that is outcomes. So we're looking at the inputs, the outputs, and the outcomes of management's measures of the programs and the performance of those programs and operations. So let's move into the types of performance auditing. And there's quite a few. I have 2 slides here. So we'll start here with process evaluation. The process evaluations are really here to help stakeholders see how a program outcome or impact was achieved. An example is a review of, say, university staff and faculty evaluations in relation to their job performance, and reviewing how these evaluations are used in terms of job development, raises, and promotions. The next one here is outcome evaluations, which really focuses on difficult questions that ask what happened to program participants and how much of a difference the program made for them. Next is impact evaluations, which assesses the changes that can be attributed to a particular program, project, or policy. For example, say a local performing arts complex would conduct an economic impact evaluation on how many jobs are associated with events and operations, or what is the effect of economic activity on employment in the local economy. And the last one on this slide is cost benefit and cost effectiveness. So for example, the number of traffic inspections carried out per inspector. Goodness. I apologize, I'm having a hard time with this technology today. All right, so to continue with the types of performance auditing, we have internal controls, which Scott had mentioned before, really is the foundation for internal auditing. And as Scott mentioned, it's to identify risk, review internal controls, and assess residual risk. So here we're actually talking about the internal controls within the program itself. So when it comes to performance auditing, an assessment of internal controls and compliance is important to include. Therefore, it's important for the auditor to understand the relevant internal controls or the key controls, the relevant laws and regulations. So for here, an example of an internal control performance audit would be, say, an organization's purchasing card program. And this is where I mentioned when I was giving the background of myself when I was with Big Four Accounting, is 10 years solid in every industry, understanding every process and operation and understanding what those controls are, translate that into programs and processes and operations within government is really seamless. We're talking about P cards, payroll, accounts payable, receivables, contracts, grants, all very seamless and pretty much can cross over a universal. The next one here is a compliance performance audit, which would determine whether incurred or proposed costs are in compliance with applicable laws, regulations, and contracts or grant agreements. And then last is perspective analysis, where audit objectives provide an analysis or conclusion about information that is based on assumptions or events that may occur in the future, along with possible actions that the entity may take in response to future events. An example of this is a special request from a council member to review the police response time in her district to determine the effect of bringing on 2 additional field officers. Based on the perspective analysis that was performed, it was determined that adding 2 additional officers to that specific district would reduce the police response time from 21 minutes to 16, or roughly a delta of 5 minutes. Based on the information, we can determine how many officers are needed to reduce that response time by, say, even further than that, and then the cost associated with that. But one thing to point out is that this type of audit would likely include most, if not all, the other types of performance auditing to make an informed decision, such as adjusting a police department staffing. So one would likely include a review of local policy, and the performance audits I've done around police departments have absolutely 100% have gone to that local policy. An example of that is a policy indicating that 2 officers will ride in a car together, and then other jurisdictions may have 1 officer per vehicle, but still need to have 2 officers on scene for a particular type of call, say like aggravated assault with a deadly weapon. So one jurisdiction would have 2 officers in the car that would show up on scene at the same time. Another jurisdiction would have 2 different officers in 2 different cars showing up on the scene and then having to wait until both arrive on that scene, which is the time frame that it would take to get there. So looking at the 2 policy initiatives, which one would result in police response time being lower or greater. So that's really important here. That wraps up this section here on performance auditing. And wow, we're really cruising through this material. If we were driving, it would look like we were driving at top speed and blowing through all the stoplights. But all right, not going to apologize for that, because I'll apologize through every slide. Anyway, so we briefly discussed the types of performance auditing, which included process, outcome, impact, and cost-benefit evaluations. We also talked about the internal controls, compliance, and perspective analysis. So let's move into the potential audit topics that could be performed. You'll see here a whole listing of different types, and this is not all inclusive, by the way, but let's take capital assets as an example. For one, we could take an internal control and process approach for capital assets. For the internal control, the objective might be to evaluate whether adequate internal controls exist over tracking and recording of capital assets. And from a process perspective, the objective might be to determine practices in place to track and monitor assets under, say, a $5,000 threshold. So as you can see here, I'm just trying to provide an example that operational audits and performance audits typically will include multiple objectives and multiple views and lenses of a particular topic. So in this case, we're looking at we would look at internal controls as well as the process itself to see if the policies, procedures are being followed as intended. The other topics listed here you'll see are healthcare, human services, police, fire, sheriff, criminal justice, and internal affairs, and transportation and communication. Whether in good or bad budget times, taxpayers, especially now, are going to be demanding accountability from their public servants for the money that they provide to fund essential core functions of government. And what we have listed here, I feel like goes to the heart of the essential core functions. One important tool to help the elected officials meet the citizens' expectations is a performance audit. And ensuring that tax dollars are not only accounted for, but are also showing measurable results is critical to building that public trust. So let me move into operational audit topics. As mentioned before, performance audit and operational audits are relatively the same, with a focus on whether management is operating economically, efficiently, and effectively. So with that in mind, you will see that these examples get into more of the details or meat of the previous slides that were more at a higher level. These are listed with the method to be performed first, followed by the objective. So for the first one, we see that the method is to examine employee time records and personnel records. And the objective is to determine if sufficient information is available to maximize the effective use of personnel. So by examining those time records, we're able to, well, we need to do a number of things, but we are able to determine whether or not there's effective use of the personnel. The other topics here that we have would include the review of sales invoices to determine if efficiencies could be gained. And another would be to assess the acquisition of goods to determine if purchase costs are the lowest possible given, the quality needed for the goods or service. Lastly, we have a review of how cash receipts are processed to determine whether deposits are made as quickly as possible. And this just must be the total geek in me, but I look at these and I think, how would I build out an audit program for these? And I pretty much whiteboarded in my brain about what documents I would need to request and the scope of the audit and how far back you would go. What's the type of information you might find that you'd request and that they would have the available data for? Would this go across multiple departments? Those kind of things. So a lot of brainstorming I do just initially before I would even get into the engagement. But these are really helpful topics if you're looking at just a preliminary review of your organization and looking to see the efficiency and effectiveness of, say, those top level activities that are being performed. So let's move into performance and operational audits and how these are different from what we would call a traditional internal audit. So similar to performance audit, traditional internal audit involves an assessment of systems, internal controls, and compliance. And performance audit will look at monitoring and reporting of that performance information. Sometimes internal audit will do that as well, but that is fundamental to a performance audit, is looking at that monitoring and reporting of that performance information. And we'll get into an actual example of the type of audit that was conducted. But unlike internal audits, performance audits are seldom repeated. Consequently, the audit tests and procedures that apply to one audit will not necessarily be relevant or useful in the next audit, which takes quite some time. And maybe that's where that brainstorming is constantly going, is it's not a rote routine, and you're constantly having to think about how to execute an engagement that has likely never been conducted before for that organization. This is a table here showing the layout of the difference between performance and operational audit and internal audit by 4 components. And those are objective, focus, audit criteria, and methodology. We mentioned the objective earlier with regards to management, and performance and operational audit measuring management's achievement of the economy, efficiency, and effectiveness, the 3 E's. Where internal audit is looking to assess compliance, risk management, governance, and controls, which was mentioned by Scott. On the focus side, the performance and operational audits are looking at primarily the programs, projects, systems, or activities. And internal audit would be looking at the risk management processes, governance, and controls. When it comes to audit criteria on the performance and operational side, it's usually more subjective, and typically an organization, you may not have criteria to audit against. So you're out looking for what that criteria is. That's why it says here, but often based on best or better practices, which represent good management. We may be having to go out and identifying that criteria for management in which to measure their operations against. And even if there is criteria, we likely would still be benchmarking against that in order to determine if it is the best or could be a better practice. So those vary from audit to audit. And on the internal audit side, we have relatively fixed and usually predefined, and that's by legislation or prescribed by compliance laws, regulations. Methodology, on performance and operational side, we have a symptom-based, and then on the internal audit side, we have risk-based. So symptom-based, which it means the audit is concerned with the diagnosis really versus the risk. So hopefully that helps distinguish the two. So let's quickly get into an actual example of a performance audit that was conducted, and hopefully thread all of this together so you have an idea of how these are the same or different in this regard. So this is an example of a performance audit that covered county's vehicle fleet services. And this performance audit covered a 5-year period. That's somewhat atypical. Normally we would have anywhere between 2 to 3 and then 3 to 5. But the division's operating budget for this was about $28 million. There were 82 individuals who worked within a total of 3 departments, which you can see here on the slide. The governance was with the director of each of the departments, and that's Resources and Development, General Services, and Public Works. The objective of the audit was to assess operational performance of the county fleet services to determine whether management and staff were effective and efficient in accomplishing their business objectives. Now, if you remember from the previous slides, effectiveness is the focus on outcomes, and efficiency is the focus on outputs. So those are the 2 elements and areas that we focused on in this engagement. So you're looking at a slide of goals of the program. So to start with, we look at the program's mission, vision, goals, objectives, targets, and performance measures. So what you see here are the goals of the program, which are really the basis for the program's objectives, targets, and performance measures. The first two are around complying with clean air regulations, the renewable green and alternative fuel programs, and purchasing green whenever possible. The next goal is to reduce the purchase of new vehicles and extend the useful life by reassigning vehicles rather than purchasing new. And lastly, the goal of the county is to standardize and consolidate the procurement process, particularly related to the issuance of their bid solicitations, the review of bids, contract negotiations, and contract awards. From the goals, we look at the program's performance measures, which you're looking at here. Shown here are the performance measures which were all based on best practice and had a baseline established. Performance measures establish the means of assessing achievement with the program goals. If you remember from the previous slide, the first two goals were to comply with renewable, green, and alternative fuel programs and purchase green whenever possible. The measure associated with that goal is shown here as the second from the bottom and is the percentage of green vehicles over total vehicle fleet. So we do that crosswalk from the department down to the program level, which includes those goals, and then the means of measuring those goals. And then we again circle back to the audit objective, which was to evaluate the operational performance of the county fleet services to determine whether management and staff are effective and efficient in accomplishing their business objectives. The reason we start with program goals and the means of measuring to determine whether we can, this is really to determine whether we can proceed further with the audit. 50-50. Typically here we stop and say the goals have not been established. Maybe it's too new of a program, or maybe the measures to evaluate those goals have been in place too long and the processes have changed and the goals have changed. So the measures aren't really measuring or assessing the achievement of the program that we need at the time. So here is our first audit finding, and we need to assess whether or not we can actually move forward and evaluate the effectiveness and efficiency of a program if we don't have goals and measures to evaluate those goals. As mentioned before, the scope of work here was over a 5-year period. I'll quickly jump through the methodologies, which really went the whole gambit. We did observations, interviews, surveys, benchmarking, comparative analysis, best practice reviews, and data analysis. We looked at their policies and procedures. We looked at all the vehicle purchasing and replacement criteria. We reviewed all the invoices, vehicle inspections. That went from like preventative maintenance and regular maintenance and how they tag the vehicles and track the vehicles. We performed a comparative analysis of the government fleet hourly rate with private automotive repair shops and performed a labor rate benchmarking study. And then these were our findings, which were quite a few. We noted that, and I'll get through these really quick. We noted that there were quite a bit of fluctuations on the purchasing as well as the disposals. We saw as much as 150 being purchased any one year and as low as 95. And then we also saw that same thing with disposals, 157, maybe I'm getting these numbers mixed up. But there was about 120 unit swing each year, which really led to the fact that basically would have negative impacts on the county, including delaying the commission of vehicles and spikes in future replacement of vehicles, and then the mechanic workloads. How do you balance that out? Over the 5-year period, the average time to commission a vehicle was roughly 200 days. About 40% of the acquired vehicles took 6 months or longer. We noted that there were no SLAs or service level agreements with the individual departments. So how do the departments know how long it's going to be for them to get their vehicles back? Just having that user relationship is really important for departments and individuals to be able to schedule. With regards to the fleet utilization, there were 424 vehicles that were driven less than the policies and procedures said that the vehicles need to be in place. So we did a calculation that indicated about $10 million. Let's see which number I'm on, number 7. $10 million in one-time capital replacement costs. Maybe I got ahead of myself here. Trying to move fast, and I think I just skipped over a couple of things. So anyway, we could have avoided 10 million one-time capital replacement costs, and we would be able to eliminate another 2 million in repairs and maintenance costs over a 5-year period by reducing 424 vehicles out of the fleet that were not being used according to their policies and procedures. Now, those vehicles could be reduced in half, and still there would be a $7 million savings here if only 212 instead of the full 424, which those cars could be shared and utilized other ways through like a pooling effort. So in conclusion here, really resource constraints are faced by government, and what we're trying to emphasize is that performance audit, operational audit, internal audit for government and businesses really help management and organization improve the quality of service and the delivery. Therefore, the need for operational and performance audits and internal audits really cannot be overemphasized.
Well, thank you all so much for attending, and thank you to Audrey and Scott for presenting, and we hope that everyone has a great day.